All right, guys. So welcome back to this particular video. And in this video, I want to go into a detailed explanation of what is liquidity. I want you to pay attention to every single detail I'm going to share with you in this video. So I know so many of you are already wondering what exactly is liquidity. I don't want your mind to go so far away. Liquidity in this market simply means money. It simply means money. And why are you in this market? It is because of money. In fact, I can tell you that this market is existing because of money. The entire Forex market trades about $7 trillion every single day. So when we talk about liquidity in the Forex market, we are simply talking about money. But then there is a unique form of money that we look out for in this market. So I want you to start seeing this market like a game, because I'm going to be explaining something that is going to be very simple and very critical for you. So let's assume you're a businessman and you are looking for opportunities. Maybe you are investing in real estate and you discover that there is a location that you can get a property at a very cheap price. Now, let's assume you acquire a property at a particular price, let's say $1,000. All right, you acquired this property at this particular price. Do you know that the only way you can get rid of something you have purchased is when you have finally found buyer? All right. Now you buy from someone, but then how do you get rid of it? You need somebody that is willing to buy from you. And how do you do that? You have to what? Do some marketing and other things. This is pure business. But then I want to bring that concept into trading and explain what exactly is liquidity for you. So this is your buying price at this point. This is the price you bought the property for. But then if for any reason people began to discover how that place has a big opportunity and you have like hundreds of people coming to ask you that they want to buy that particular asset from you. Now, this will force you, because of the demand, will now force you to either increase the price of that property or decide to sell it at that particular price. So this is the reason why the price of an asset goes up. Why? Because there are so many people willing to buy. I hope you're understanding that. So every time you see people buy something, what will happen is that they either sell it at a higher price or lesser price or even at equal price as the what buying price. Now, in trading, whenever you see price going up and coming down, it is assumed that there is money flowing into the market either as a result of demand or supply. But the uniqueness of liquidity comes in very handy in this regard, that if you are buying this particular product, there is definitely a particular price you're willing to sell. Now, if you sell this particular property at this level, this could be maybe 1,300. It means that you are selling at a higher price. But then if you are selling it here, probably because of some things, and then the price of this asset decided to go down, it means you are selling maybe around 600. You see that if you minus 600 from your $1,000 that you use for the original purchase, it means that you have lost money. So this is what happens every time you see market tries as much as possible to hunt where people have their open orders and probably their stop losses. So this money we are talking about is in the form of people's stop losses and pending orders. So if you buy anything in the market, let's say you're buying Euro USD or maybe you're buying gold. If you're buying it from here, your stop loss is going to be somewhere around here or wherever you want to put it according to your risk management plans. So maybe you take profit somewhere around there. If you are not able to sell it at a higher price than the one you purchased from, and price decided to go down, probably the price of that asset goes down, your stop loss for a buy order becomes a forceful sell order. You're being forced to sell at that price, all right? Or you're simply giving the system an order to sell it. Why? Because at this point, you don't want to lose more. So for anything to go out of your hand, you need to sell it. So if you buy, the only way you can get rid of it is to sell it. So your stop loss is a sell order and your take profit is also a sell order for a buy. Please don't forget this. So where your stop loss is called liquidity. Do you see that? So when you see price do something like this based on algorithmic movement, it moves from one point to another, comes back, and is about to push up again. Where do you think the ideal trader will want to buy again? Probably at a demand area or support and resistance, or maybe retracement area. If you're buying from here, the ideal place to put your stop loss is where? Maybe somewhere around here. So when we talk about liquidity, is your stop loss, all right? Is your SL. So if price haunts your liquidity, it is simply because this is where the money is, and the money at a cheaper rate. And let me show you this lastly, because I'm explaining this graphically. I am trying to explain this so that you will understand. Now, still on our sketch, you decided to buy it, maybe somewhere around here. You're buying it from here, and at this point, the price is somewhere around maybe $200. Just an example, $200. But then where your stop loss is around 150. Remember, we said that your stop loss is a sell order. If price decided to go down, to pick your stop loss so that it can buy at a cheaper price, definitely the price movement always look forward the best opportunity, or the smart money always look for the best opportunity. So what happens is that you are selling at a cheaper price when you have already bought it at a higher price, because you're just saying that I want to sell it here. So do you think I would want to come and buy from you so that I can come and sell here? Yes. Instead of buying from here, buying here is a lot profitable as a businessman. If I buy something for 150 and decide to sell it at 500, than buying at 300 and sell it at 500. Which one will give me more profit? 150. So this is why they hunt your stop loss, and this is why they look for where the liquidity is. Now, I hope you understand what liquidity is. So where your stop losses are, you're not the only person in the market. There are hundreds of traders putting their stop losses here. So we call it liquidity pool because that is a pool of liquidity. A lot of people are giving command to the system that they want to sell their orders down here. And if market comes back, it's a huge opportunity. And then here it is. Because the institutions are the largest players of this market, it is expected that they are always looking for an opportunity to fill up their order. All right. Let's say the smart money is here to buy something with $1 billion. All right. 1 billion. I want to give you as many examples as I want to give you, and this video is going to be a little bit longer. So if this guy comes with $1 billion, it's very possible that he may not be able to fill up all the orders he wants to have there. So if price starts buying from all the sellers at this level, he will try as much as possible to go and sell it for people that are willing to buy when it is expensive. But then while he's buying from here, he's seeing people put in what? You see, their stop losses is here. They are willing to sell for him from here. This is it. If he's buying here, these guys are willing to sell for him here. Now tell me, if you are smart money, would you decide to just go without taking up these guys? You will come back and buy from them, because here is what? $70, and here is maybe $40. So it's better I buy it from somebody selling from $40 than to buy from 70. So he comes and grab all the liquidity pool, and boom, he goes up. So I'm going to show you in detail subsequently how you can apply these things on your chart and how you can see it, how to identify these things in detail. But just know this, that liquidity in simple word is your stop loss. And your stop loss is what? Is money. All right, money for me, money for the smart money, and that is why we want to trade like the smart money. Let's get to the next video and explain it in detail.